Hey, this is Matt from InvestiQuant. Today is Thursday, September 23rd, 2021. The markets have seen some buying all day on the aggressive side. We had a gap and go to the upside today. We've got about 48 points of range currently as of the time of this recording. You can see the top left chart here is the S&P. S&P gapped up, took off to the upside. We've consolidated a little bit, and we are starting to trade back up towards the highs. Good range, good volume taking place here today. So what we'll look at this afternoon is what has happened historically with this type of trend-like activity that we are seeing. So let me go ahead and select all four instruments. Setup will be based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now this morning we gapped up, so I'm going to add that to the study by going to the opening filters, gap direction, gap up. I clicked on that. It has been added. Next, I'm going to go into the post-open filters and describe the trendy activity like we are seeing so far. Our open was near the lows of the session, so I'm going to go open versus intraday range, and I'm going to say that the open is in the bottom 25% of the intraday range. I've hit equals next to it. That adds it to the test. Next, I'm going to say that the 3 p.m. price, which is the entry time for this, is in the top 25% of the intraday range. I can come here, intraday close versus intraday range. The close is going to be referencing the price at the time of entry, which is 3 o'clock, and I can hit equals next to close and top 25% of the intraday range. And then lastly, I'll put it in a similar market environment. We're coming off of some recent lows. We closed below the 10-day simple moving average yesterday, so I've got that selected here. Yesterday closed below the 10 and above the 200-day simple moving average. Now I can click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you get a gap up and then continue higher directly from the open and are trading up near the highs at 3 o'clock. This is taking place in a weaker bull market environment. So historically, we've got 161 samples of this. For the S&P, it's 148 for the NASDAQ, 142 for the Dow, and 141 for the Russell. The win rates on these are a touch weak. You've got the S&P coming in at 42% of these have closed above that 3 p.m. price. For the NASDAQ, it's coming in at 45%. For the Dow, 42%, and the Russell 53%. So 3 of the 4 are under 50%, and it looks like the S&P is the weakest there, just around 42%. If we look at the average moves, the average loss is a little bit larger than the average win for the S&P. That is also the case for the other instruments as well. So it's not really a large skew there in either direction. It's just a slightly larger average loss compared to its average win. It looks like it's been a little bit weaker here in recent years. You can see that if you just look at the table down below, last handful of years, it's been much weaker than the overall sample. So historically speaking, this pattern has been a little bit weaker into the close. Maybe that means you want to tighten up your stops if you are still in it from the long side. But hopefully you found this helpful. Good luck the rest of the day, and we will see you next time.